Hey everybody, welcome back. Today I thought would be a great time to take a look at one of the most recognizable companies in the United States, and that is the Hershey company, best known for their Hershey's chocolates. And this company trades on the ticker symbol HSY and is of course a consumer staple in the packaged foods industry. Hershey has recently seen its stock price collapse, and so that's why I thought it would be a good time to check out the company, its financials, and to see if this is a good time for you to think about whether or not this is the right stock for your portfolio. So basically the largest reason that Hershey's stock price has fallen so much is due to this cocoa crisis, where cocoa prices have been absolutely parabolic, triggering what many believe is a coming chocolate crisis. Of course, because cocoa is the main ingredient in chocolate and candy bars that use chocolate, which will have a major effect on Hershey's bottom line. So as we can see on the right, JP Morgan says that the cocoa prices are rising due to a global supply shortage, as well as chronic underinvestment in cocoa farms, coupled together with investor speculation that's currently occurring. And as I just mentioned, the impact of higher cocoa costs is price hikes for the chocolates that you love, as well as shrinkflation, meaning maybe the candy bar's price is not going to go up, but you will get less candy in that bar for the same price. So we've been seeing a lot of shrinkflation with many different food items as well as other items in the last few years, and it is looking like chocolate is just going to get worse in the near to medium term. To illustrate just how crazy the cocoa prices have gotten, this is a chart from the Federal Reserve of cocoa prices per metric ton in US dollars from 1990 all the way to present day. So if I start in 1990, we're looking at about $1,000 per metric ton, and it's stuck around that level between $1,000 and $2,000 until 2008. And after 2008, it really stuck between $2,000 and $3,000. So obvious inflation in the price, that makes sense. But in the last couple years, it has rocketed up to $5,640 per metric ton of cocoa. And actually, I just wanted to double check, the most recent prices, because that was February 2024 was the end of the Fed's numbers. And I'm here on investing.com showing the US cocoa futures, and the May 2024 contract is trading at $10,500. So it is more than doubled again from February. So what we're looking at is essentially a 4x, almost 5x from the 2020 to 2023 prices in about 3, 4, maybe 5 months. This is absolutely insane. It would put stocks like Nvidia to shame with how big on a percent return basis this move has been. So this in large part explains why Hershey and other candy companies are going to be experiencing a cost crunch in the near future, and their stock prices are reflecting that. So before we get into the financial numbers for Hershey, can you please take a moment to like this video and subscribe to my channel, as it really means a ton to me, and it helps me know which videos are most useful and which videos you guys like to see. So with that, let's check out the revenues. And for Hershey, these have grown really nicely over the last 5 years. They've been up 8.74% per year. EBITDA has grown exceptionally as well at 10.38% per year for the last 5 years. And the company's annual operating earnings per share is up 13% per year for the last 5. So far, everything looks really good from a growth perspective, especially when we're considering that Hershey is a very old, well-established company. Gross margins have shrunk slightly for Hershey, and I will say that probably in the next year or so, when these cocoa prices start to filter through their financials, we will see margins collapse a pretty solid amount. So that's definitely something to be on the lookout for with Hershey, although I think long term this probably isn't a major issue. Operating margins look much the same. They're a bit more stable and slightly more positive in growth than the gross margins, but I would expect the same theme in the next few quarters to maybe year or two. We're going to see the annual operating margins compress for Hershey due to the really high input prices from cocoa. The company's return on assets has also been stable, although slightly growing, which it looks really good. It's been at about 2.5% per year that their return on assets has grown. So nothing to complain about here. The company is operating quite well. Hershey is buying back shares as well, to the tune of about 0.5% of their shares outstanding every single year, which is really great as a shareholder. It means that you own a little bit more of the company every single year. So certainly I have no complaints with that. The company's cash on hand has generally been stable with the exception of a major uptick in 2020, and it currently sits around $400 million, which is about where it's been on average over the last 5 years if we exclude that big bump in 2020. Debt has also been fairly stable for Hershey, with their current long-term debt outstanding at $3.7 billion, which is quite a bit higher than their cash on hand, although a lot of this debt is at a very low interest rate, as we'll see in a second from their interest expenses. So I think this should be very manageable for the company. And so taking a look here at their net interest expense, it is all negative, meaning the company is actually earning a positive $150-ish million per year, just based on interest that they receive from their cash and investments, minus the amount they pay on their debt. So the cost to finance and maintain that debt for Hershey is not nearly as high as the money that they earn through other means. So I think, as I said before, it's very sustainable, and I'm not too worried about Hershey's balance sheet. Free cash flow has been a little bit more bumpy, although it's stayed basically the same from the 2019 to 2023 fiscal years. So I would like to see this number start to increase at a bit more of a steady pace, even if it is a slow, steady pace. But if we were to back this out to like a 10-year view or a 20-year view, we would see that slow, steady growth occurring. So this might just be a situation where the last few years look a little bumpy, but in reality, it is still slowly growing. On a free cash flow per share basis, things do look a little bit more steady and slowly trending upwards. As we can see, free cash flow per share has grown by 2.38%. So because the company is buying back shares, even though their free cash flow is staying steady, there are less shares outstanding. So you get a little bit more free cash per share. So checking out the PE chart, for those of you who are not familiar with my videos, this red line represents the average price to earnings ratio of Hershey for the last 5 years, which is currently sitting at 21.73. This black line then represents the closing price to earnings ratio on a weekly basis for the last 5 years. And so anytime the price is underneath that line, you could argue that you're getting at least a fair, if not good deal for buying Hershey. So as we can see, the company's current PE is at 20.95, sitting right here. And it is sitting at a value of about 3.5% below its 5-year average PE. So while we aren't seeing price to earnings ratios get as low as 18, 17, even like 15 to 16 as we've seen in the past with Hershey's, now isn't necessarily a bad time to buy because the company is fairly valued. And as we have seen through their financial numbers, this is a really strong company to be invested in. So moving to our value chart, what this is showing is the earnings per share multiplied by the fair value PE that I assign to this stock. So because Hershey is growing at less than 15% per year, I assign a fair value PE of 15, which is then multiplied by the earnings per share each year to show this purple line, which is the fair value at a 15 times earnings. So in 2018, the fair value would be $82.35. And today that fair value would be considered about $136.35. But what you'll notice is that Hershey has never actually traded at or below that price in the last 5 years. And that's because the company is such a strong company in general. It just commands a premium on the market. So if I bump up my fair value to match the company's 5-year average PE of 21.73, that's going to round to 22. And as we can see, Hershey is at a fair price today. Now, this thinner line that moves off to the right represents the projected annual growth of the company's earnings based on its projected compound annual growth rate of 6% in this case for Hershey's. So today, the fair value for Hershey is about $197. By this time next year, we would expect it to be worth $209, then $222, and then by 2026, about $235. So please keep in mind, stocks never move linearly. Of course, earnings don't either. So these are just estimates. These aren't saying like that is the right price. But if you were investing in Hershey's for the long-term outlook, I would say that right now is a decently attractive time to take a look at the company. So to go over some quick pros and cons, on the positive side, Hershey is a very recognizable brand with an incredibly strong moat. So you're buying a company that has been around for a very long time, and I would expect it to stay around, again, for a very long time. Second, it has great financial performance over many decades. So we know that this company is managed in a prudent way, but management also isn't too conservative that the growth has stopped. I mean, Hershey continues to grow at about 13% per year for its earnings at least. So we know that this company is still growing and they have a great balance sheet, which means they have plenty of room to handle any sort of shock as is occurring today. And then finally, like I said, they have a very solid balance sheet and the company continues to generate free cash flow like an absolute machine. So again, that's something that you really like to see. The free cash flow gets paid back in dividends as well as through share repurchases. So this is a great company for just about anybody's portfolio if you're in need of a solid financial performer, a kind of foundation company. On the negative side, what I will say is the company is only trading at its historic fair value. Again, that's not necessarily a bad thing because, as Warren Buffett likes to say, buy great companies at fair prices. And I think Hershey would fall into that category of being a great company at a fair price today. So there's certainly nothing wrong with trading at its historical fair value. Of course, if you're looking for more of a deal, you can feel free to wait and see if this cocoa shortage can play into your favor further. But I certainly don't see this as being a massive negative. It's just something to be aware of. And then finally, of course, the input prices, aka cocoa, may remain volatile. This is for a few reasons, as JP Morgan pointed out, for underinvestment in the cocoa space. But also we need to think about global climate shifts in the future, as cocoa can be a bit more finicky to grow than other crops. And so as our global climate continues to shift, we may see the environment that cocoa can grow in start to shrink, be eroded, be cut down by in deforestation, etc. So it is something to be aware of, that such an important input in the chocolate making process is looking quite fragile today. And that could affect the company for many decades if, global crops just never quite recover. So that's my biggest worry with investing in Hershey, and that's something that I think you should consider as well if you're planning on making an investment or looking further into Hershey as a company. But with that, I hope you guys enjoyed this video. I want to reiterate that this is not financial advice, of course. Please do your own due diligence when you are researching Hershey or any other company that you find on my channel. But with that, thank you so much for making it all the way through this video. If you could, please leave a like on the video and subscribe to my channel, as I cannot wait to make more videos like this for you. If it interests you, there should also be a recommended video popping up for you right now, and I would love to see you there as well. Thank you so much, everyone, and I hope you have a great day. Bye.